Hello, friends. Welcome to Nirmal. I am Piyush Jain, and today we are going to focus on geopolitics, commodities, and all the major commodities which are also affecting the stock markets and also are very important for your commodity trade. And that includes crude oil. We'll also discuss gold and everything which is important around the development here. To discuss that, let me welcome to the show a renowned expert, Mr. Jonathan Barratt, CIO of Probis Financial Services. Mr. Jonathan, as always, welcome to the show.
Thank you very much for having me.
Let's straight away talk about the crude oil first, and then we'll sort of go to the Chinese demand, OPEC, and the US markets. But on crude oil prices, 12% down month on month. Prices are already sort of trading multi-month low. How is it looking to you, and how much sustainable these prices are?
Look, I think when you do look at crude, when you look at Brent, when you look at the WTI contract, all under an extreme amount of pressure. There is significant concern, obviously, that we will flip into a recession. I think when you do look at it, it's either a recession on economies that have a stranglehold on high interest rates, and now it's a potential recession on the back of the banking financial crisis, where we think people and investments will just be subdued. So there is a definite front where people are starting to think that if we do go into a recession, then you'll see some form of demand destruction on the commodity front. And it just seems that oil seems to be the one that obviously has the major concern, because that's under an awful lot of pressure.
From that aspect, if I go to the US markets and if I try to assess what's happening in the USA from the perspective of the banking issues, from the perspective of we have seen recently interest rate hikes, associated slowdown. Let's sort of talk one by one here. What do you make out of the current banking turmoil?
Look, I think it is a major concern, and I think we're just trying to work out whether it's just the tip of the iceberg. When you look at historically the largest failed banks in America, you can see that the last Silicon Valley Bank, First Republic, and also Signature Bank are some of the largest banks to fail in corporate history. So you get a sense that this is very large indeed. It also gets to test the resolve of Dodd-Frank and Basel III as to whether or not the banks are actually, or have they actually complied to the regime that was put in place as a result of the GFC and the Lehman Brothers crisis. So have other banks sort of not put up that particular amount of credit or those requirements of those two regulations? If so, and why? But I think the main concern, I would think, is that are there other banks which are in the same situation, and whether we're going to see a knock-on effect or a contagion start to develop. And I think that's what the market is really looking for and hoping that it is not the case.
Right, and from that aspect, how actually you are looking from perspective of dollar? Because we have seen it's a very circular effect here. You see the sort of banks going under, and because of that, the fear cycle starts. You start seeing fall in treasury yields. There is also a sort of a pushback, dollar again going down. How sort of the bonds and the dollar actually are playing their part right now?
Look, I think when you look at the yield curve, and I think of where you see, I guess, the hawkish v dovish requirements that everyone's starting to think about. 2 weeks ago, we were saying hawkish and what will be the terminal rates for interest rates. Now we're saying, oh, look, eventually it's going to be quite dovish. So I think the medium-term direction on interest rates in the States is for just a last round of increases. And then I think a lot of us are starting to think there'll be a dovish tone that'll come into play. And then we'll see what happens. I think generally we thought that the dovish tone would be later rather than sooner. So more hawkish, more rate rises, and then things will come back. But we actually think that terminal rate on the current monetary tightening will come closer if, in fact, this banking crisis does continue to develop, or the story develops and we have more issues. How that affects the dollar? Well, the dollar in itself should come under some pressure unless there is a safe haven call. But as we can see, safe haven movements now, I think, have been restricted to some other commodities such as gold. and generally just obviously, as we know, with the bonds. But I do think there's still, the jury's still out on what will happen. And as we have FOMC meeting this week, we'll see another interest rate rise. But the more important thing will be see how the Fed reacts to the current crisis in its current cycle.
Right, and you would have seen how again ECB actually registered a strong rate hike, and well, I was thinking again with what is happening in Credit Suisse and the associated banking sector in Europe also, will ECB also register a sort of dovish tone here? But sort of we saw a good rate hike there, and when we talk about the dollar index, usually the sort of a relation between euro and dollar is also very important, and that affects directly dollar index also, gold also, and then other commodities also. What are you making out of what's happening in Europe?
Well, I think the interesting move in Europe, obviously, this week we'll see what happens in for the UK. We've got UK announcing their interest rate movements. The market has also tipped for another increase of 25 basis points there. Once again, we'll have inflation data. That'll also dictate what happens to the UK. Similarly, ECB will have more announcements as to see how the economy is actually working. When we look at what's happened at the Swiss National Bank, where we've found that they were supporting the Credit Suisse, but now we know that UBS is actually buying it. Will that problem go away, or do we have other concerns, in Europe? And I think we've got one issue which might develop, and that is the case: is Credit Suisse just one of one incident, or are there many others to follow? And I think that's what we're going to try and find out. That's what we need to find out. Hopefully, it is only just bad management of Credit Suisse. But if it's not the case and we get other concerns, then obviously other bailouts will need to be. And I think that'll be a little bit of a crisis. That could see the US dollar under a fair bit of pressure, I think. At the moment, you can see that the US dollar index is finding it very difficult to get through 105. More comfortable in my mind to see it back around that 100 level. But that's more on a technical footing and rather not on the fundamentals. Would like to see more data across the board, though.
Now I'm going back to crude, and later on we'll talk about gold. But I'm trying to sort of link whatever we've talked to the crude prices now for our viewers, just to make it simple for them to understand. What happens for the crude prices? This is a very novice question, but what happens for the crude prices if the dollar actually weakens further? Now, one is basically that Europe sails through. There is no major negative news after Credit Suisse. US takes over. It's all like sort of very good feeling, and US keeps resolving its issues. So in that case, dollar remains weak. But if Europe, there are more sort of negative issues coming out, then obviously there is going to be a rush of safety towards dollar. So what happens and what it implies for crude traders?
I think when you look at crude has and does trade independently of where the dollar goes, and that's what we have noticed. It has been in quite a range, basis the WTI or even basis the Brent. You can see that only last week we were on the WTI, we were 75.80 for some time. I think that if the crisis does develop, then I think you will see that demand destruction. And if we do see that, well, then some commodity prices will come under pressure. And crude oil, I think, will also come under pressure. Remember when we had hints of it before, we've seen some dramatic falls in the price of crude. And I think that if these start to gain momentum in terms of the failures, then I think regardless of what the currencies do, people will start to think there'll be no need for the commodities, and as such, we'll see a sell-off.
Absolutely. And for our viewers who were not witness to 2008, at that time, WTI crude and Brent crude, they actually saw a sell-off because largely there was a confidence destruction and associated view on the demand destruction, as Mr. Jonathan is pointing out. So that actually can be a very severe. So you really have to watch out for that development also. And now let's go to fundamental discussion here. Chinese demand is back. Economy has opened up. We actually are seeing the demand this year being projected almost at a 2-year high, almost 12 million barrels. According to you, and also we are seeing some new refineries being coming up this year, at least three refineries. which actually are going step by step going on stream this year. How much important this Chinese demand really for supporting the oil prices, and how much strength do you see we actually can derive from that?
Mm. I think with China opening up due to the COVID, also coming out of the winter months, you'll probably see more demand pick up for some of the commodities. When we look at other commodities such as copper as well, you'll find that China is the number one consumer, and when you look at her, she's the number one importer. So she does play a very important, critical role to what actually occurs in the commodity sector. But having said that, if commodities do happen to come under pressure, crude oil, copper, well, that only means it'll be cheaper for China to actually produce and turn around their imports into actual exports. So I think China's quite happy to sit back and sort of see how this all unfolds. And as a result of that, if commodities are cheaper, it'll be beneficial, and it'll be beneficial for her economy. And as a result of that, but I do think that the dips that we have in some of these commodities, given where China is placed in terms of her recovery, you'll find that she'll be on the back foot buying these commodities rather than having to chase prices. So I think she'll just more wait and see. Let's see what occurs. When we do look at copper, for instance, we know that her demand for copper will be up 3.5% this year. And when we have a deficit situation in supply, then we can really start to think that that's one commodity that we really do like medium to longer term. So China is extremely important in terms of where we see the commodities, but I do think she'll be more on the back foot when she's purchasing rather than on the front foot trying to chase prices.
Right, and I want to revisit this question. Before that, I just wanted to complete my question on the OPEC view from you. OPEC is continuing to maintain supply cuts. No surprise. How much right now, basically, you're looking as an importance of the OPEC at present, and how this is playing its part in the larger price stability?
What we're referring to OPEC in that regard?
OPEC actually in the last meeting said they're going to maintain their price cuts for 2023. I was referring to that.
Yep. No, I think OPEC plus OPEC and Russia. I think when you look at that equation, they'll stick to their guns, and the reason they'll stick to their guns because prices are under pressure. So I get a sense that they will manipulate in terms of the way they treat the market, given where the price of crude oil actually is. And at the moment, because it is on the weaker side, and you saw it pretty much on the weekend where they came out and OPEC came out and reiterated their needs to continue to have the cuts as they mentioned. So I think if anything there, that failed to do much movement in the market, and the market came under pressure. So really, I think the overall weight is for people to be concerned on global growth, and as a result of that, on where crude oil is trading.
Okay, and now let's sort of move away from crude to gold, where we were talking earlier. Again, it has outperformed over the last many months. What's your outlook on the gold and silver both?
Yeah, I think when you do look at the gold price, it's left. The recent moves we've had, I think, have left a few people behind, and I think in that regard, I'd probably expect to see probably a little bit more to the top side. Now, I think the interesting thing for gold at this level, and we're just shy of that $2,000 an ounce, is it'll either sort of see a trend higher or it'll cement a very important top in the place for gold. So if anything, it is at that junction that it'll either trade on significantly higher or we reverse, and then that's it for the gold rally for a foreseeable future. I think the feeling we've got with this financial crisis upon us is that prices will remain relatively well bid as people move to safe haven. But I would not want to be stuck here with a long gold position at these levels. So I'll be very close to the market. And if we do see that retraction, then you would look to get out of the position. But at the moment, given the news that we understand, the current macro picture is really suggesting that gold should continue to trade higher from here. And likewise, when you look at silver, silver is perhaps the underdog here. And I think if I was looking for value, that would be the silver that I would tend to look to trade into. Remember when gold was up around this area before, silver was up around about $40. So as a result of that, where we're trading for silver at the moment at 2022, then I actually think that silver does represent the better option.
Absolutely. So we are taking two important points here. Creating fresh long position in gold is a bit risky right now, and silver compared to gold actually offers far more attractive opportunity compared to what gold-silver ratio we have seen in the past. So those are two important sort of inferences here. Moving to the base metals, where you were alluding, and now actually I want to sort of have more discussions. For the base metals, whether it's nickel, copper, aluminum, amongst all of them, is copper your favorite, or do you see opportunities in other metals also?
Look, I'll have to say that all the metals are important, but I think copper displays the best price action and also has the best fundamental story behind it. When we look at copper, obviously it's a litmus test for the global economy, but we understand and we know that there's a deficit in the supply. We also know that it's a metal that's well sought for not only development but also energy, renewable energy. So when you actually look at the fact that we don't have the supply, not only just going out for 6 months but going out for a year, 2 years, you get a sense that this is one commodity that I think will start to trade significantly higher from these levels. So generally speaking, copper in itself, I think, is just a buy on dip. And if it's a buy on dip, it's for the long hold because we feel that given the economy, even if it does come under a recession, yes, you'll get a bit of a sell-off. There's no problems about that. But when you look at the supply demand, the actual deficit and the growth of the need for the metal moving forward, that it does represent something to have in your portfolio going forward.
Okay, so that's interesting. Base metals, especially copper, again, is a buy on dip. Having said all of that, we talked about crude, we talked about gold, silver, copper. Having said about all of that, what's your overall scenario about the markets right now? If you had money in the bank to really put into the markets, will you like to actually sit on sidelines and first sort of assess the trajectory of whether it's commodities or the dollar, or you would like to actually go into the market right now?
Look, I think that I think it's cautious. Caution is the correct stance at the moment. Certain commodities remain standouts. I think that money is sort of, you've got some good competition for return. Interest rates, which have moved between 4.5%, in some economies, that's starting to represent good value. Remember, we were getting nothing on them. And I think if you've got that safety net to say, well, if I go into the market, which ones will I be? They'll be the ones that have the good fundamental story behind them. I would, and have done, and have moved a lot of money out of the equity markets and actually position them in cash, because I think equity markets still have to come to better value. But some of the commodity markets, as I've outlined, do represent some good value.
Okay, and that's interesting. Any view on the currencies also?
The currencies, when I look at the currencies, I must admit I do like the Australian dollar, not because I am Australian, but I think that every time it gets below these levels as a commodity-based currency, it always sort of bodes quite well. So any dip on that, I think, is always a good thing.
Yes, absolutely true. Again, very large exporter of commodities. Again, Australian dollar perhaps is a sort of viewpoint from that aspect here. And Mr. Jonathan, overall, as we sort of round up and sum up our discussion on a commodity and on a global market sort of comment, how is 2023 looking to you?
Look, I think it's where all of a sudden going to see a lot more challenges. But overall, I think if we can get through the challenges, it should be fine. As I said, it's a standout in terms of some commodities and a readjustment of some asset prices. I really do think that at the end of the day, we've really got to see how we get through the current crisis and whether or not that represents or bodes very well for the rest of 2023. But there are a few standouts which we've mentioned. I think it's going to be trials and tribulations of all the markets. We experience it every year. Let's just see if we can just get and work our way through the opportunities.
I'll just squeeze in one last question before we sort of wrap up the show. And like I asked you on the currency or the copper or the gold, on the crude, what will be the position right now? It's a wait on sidelines. You expect more dips, or it's a good time to jump in?
I would be on the sideline waiting. If I needed to do something, I'd want to see it on the WTI contract break back through $75 a barrel. If it does then I'm confirmed a low. But if it doesn't, then it's still weakness, and look for opportunities. If anything, I'd be buying on breaks to the top side rather than buying on a dip.
That's a very clear strategy for our viewers. And Mr. Jonathan, as always, insightful comments, and we actually got a sort of good idea on which commodities we should be focusing on. Thanks a lot for coming on our show.
No problems. Thanks very much for having me. Bye-bye.
And dear viewers, with that, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.